Restore issued a positive AGM update yesterday, confirming that trading is in line with expectations, with all divisions expected to deliver an increase in adjusted profit for the full year. Whilst last year's earnings growth was driven by margin enhancement, the focus for FY25 is revenue growth, alongside further underlying margin progress. It is therefore encouraging to hear that the group has delivered revenue growth in the first 4 months of the year, underpinned by the highly reliable records management business. Recent months have seen a return to the M&A trail, with 2 new data shred bolt-ons announced in yesterday's update. The management team has an excellent track record of delivering value-enhancing M&A, and we expect this to be a feature of the medium-term growth strategy. We make no changes to our forecast at this stage and look forward to a further update on trading at the interim results on 29th July. The shares are showing early signs of a recovery in momentum, but all valuation metrics remain very attractive by Restore's historic standards. We reiterate our 400p fair value estimate.